Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Steve Townend. Steve is the CEO of BOC Aviation. He's joining us for our Aviation Leaders Report for 2025. And we're recording this in early November in Singapore. I should say we're recording this on US Election Day in Singapore. Steve, before we get into the meat of the conversation, two bits. First off, congratulations as you near the end of your first year as CEO. Love to hear how that's gone so far. And could you also tell our watchers, most of whom will know a little bit about BOC Aviation?
Yeah, sure. Well, first of all, welcome to Singapore. As you know, BOC Aviation, we're headquartered here in Singapore. We've been here now for 31 years. We're listed in Hong Kong. Our largest shareholder, Bank of China, owns 70%. The rest is the free float is traded globally, a lot of large global shareholders. We're headquartered here in Asia, but we run a global business. And so the fleet is split quite evenly across the globe. Very much a focus on the younger aircraft, the latest generation technology. Close to 80% now of our fleet is latest generation technology aircraft. And we are one of the highest rated companies in the industry. We're A- rated, which gives us obviously a huge advantage then in terms of cost of funding.
No, very interesting stuff. And I think we're going to pull a thread to that as we go through the conversation. But maybe to kick us off in the demand environment, which we've seen has obviously been very robust. Can you talk about how you've seen customer performance and demand evolve over 2024? And just are there any kind of interesting nuances in that from a geographic perspective?
So I think 2024 has been interesting. By and large now, most economies, COVID is in the rearview mirror by a long way. We've seen that recovery roll out broadly from west to east, starting in the Americas, then into Europe, Middle East, and into Asia. I think what we're seeing now is people adjusting to the new normal, if you like, and where we are. And that means different things for different people. Here in Asia, traffic broadly is now back up above previous levels. Yields are good. If you can get a plane in the air, you can fill it and you can make good yields from the passengers. I think globally, yields are starting to normalize. That post-pandemic peak has come off a bit, but it's not that we're falling back below historical levels. We're just reverting back to the mean. I think the only outlier we continue to see is the China cross-border traffic. Domestic China is incredibly strong. Domestic China traffic levels are at all-time highs. But we're seeing some of the trans-border, cross-border traffic still not back at previous levels. Around Asia it is. Between Singapore here and into China, traffic is back up above any previous levels. Europe's interesting. What you've seen recently is a number of the European carriers pulling out of that Europe-China routes. Mostly because with not being able to overfly Russia, the travel time is just so much longer. So what we're seeing there is that whereas back in 2019, that Europe-China traffic was being flown about 60% by European carriers and 40% by Chinese carriers, it's completely flipped around now. And so it's over 60% being flown by Chinese carriers and less than 40% being flown by the European guys.
And I guess to tease that out, so that's mostly a positive picture as you stand back and look at it. One of the concerns you'd have potentially is, whether it's macroeconomic or geopolitical, they're always concerning matters, right? But as you look at your customer base now across from an airline perspective, do you think we're in a heightened state in either of those areas, or is it more just ongoing and consistent challenges?
I think it's ongoing and consistent challenges. I think what we're seeing today is not necessarily any different to what we've seen over a number of years. Clearly, this year has been unique in the number of elections happening globally, and that still hasn't all played out yet. As you said at the beginning, today is the US Election Day, so we'll see how that plays through and what effect that has. And it'll have some effect on global trade, I'm sure, which does drive a lot of passenger traffic. So we'll see how that moves through. I think the only other thing that we continue to see is There were some airlines that, as we went through all the difficulties of a few years ago, because of where they were based, it was difficult to do their restructurings in a sort of court-approved type process. And so for those guys, it was much more difficult to resolve some of the issues in their cost base, in their network, that some of the people who went through more structured processes were able to do. And so some of that is still working its way through the system. And I think some of that is what we're still seeing with that small number of airlines having challenges around the world these days.
And maybe if we move gears to a point you referenced at the start, which is really the supply side.
Yeah.
You know, and the supply chain has nearly become the supply strain. And if we look at it and think about what does that mean when you think about that from a BOC aviation perspective, you know, very large lessor, you know, lots of assets in your balance sheet, but lots of potential assets on your order book. How impactful are the supply side challenges being on the business, and just how do you see that uncorking?
So I think it is specifically for the aviation business, the biggest challenge that we have right now is around the supply chain. And for a lessor, it's good and bad. You know, clearly, if you have aircraft, the lease rates that you can achieve, the demand you have for that aircraft is much, much higher than it has been, certainly in recent times. I think the last time we saw this imbalance of supply and demand is going back pre-financial crisis to sort of 05, 06. So a long time ago. Which is good for new aircraft, it's good for the used aircraft you have in your fleet. Most of our customers want to extend leases when you get to the end of them. We're even seeing a greater number actually wanting to acquire the aircraft at end of lease as well. The challenge though is obviously, how do you grow without the new aircraft coming in? If I go back 12 months, we were expecting total deliveries in 2024 to be materially higher than we had in 2023. We don't think that'll be the case now. We actually think with all the different elements in the supply chain, we will have fewer deliveries in 2024 than we had in 2023. And so that's a challenge for people like ourselves with our order book. It's a challenge for our airline customers. And it looks like it's going to continue for a long period of time. This is not something that is going to magically change in 2025. If we look back to 5 years ago, what did we expect would have happened during this intervening period and through to the end of this decade? And we look at how many aircraft did Airbus and Boeing in particular think they would produce. And then we look at what have they produced so far and what are they now intending to produce the next 2, 3, 4 years. The industry is going to be about 5,000 aircraft short of where it thought it would be. And that, if you're looking at that sort of mainstream product base of about 20,000 aircraft, that's 25% short. And so it's going to take a long time for that to work its way through the system, because even today, ignoring the strike that we currently have in Seattle, even for the other manufacturers, they're struggling to spool up in the way that they would like to.
Yeah, and that feeds into a point you referenced around lease rates. Lease rates are two primary factors. Will be obviously around the cost of funds and the demand environment. And it's logical in that way that both of those are kind of ticking upwards. So we're seeing presumably lease rates materially rise. Is that fair?
They've materially risen from where they were a couple of years ago, as you would expect. I think they were below average levels 2 years ago. They're materially above average levels right now. But if you split, I think you need to split lease rates into two different forms. So there's purely where airlines want capacity. So they need additional aircraft. And so that's really just based around supply and demand for aircraft. And so lease rates have gone up materially there, driven by that supply-demand balance or imbalance. The other side is where actually they're looking to raise finance for their own aircraft. So where they're looking to sell the aircraft and lease it back, which is not a demand for capacity, it's really a demand for money, for liquidity. And that's then more driven by interest rates. And so we haven't seen lease rates go up by as much on that side, because at the same time you've seen the base interest rates coming down.
One point you referenced there is obviously airlines are so keen lock in the lift that's available to them at the moment, given the uncertainty around the order books. How different is it now in seeing airlines engage with you around extension requests, or even, as you say, requesting to purchase the aircraft? How much earlier are you being approached?
So we are placed out for the next 2 years, both new and used, which is unusual, particularly on the used aircraft side. And so we're beginning to have discussions already with our airline customers about aircraft where the leases aren't due to terminate until 2027, which is remarkable really in terms of that planning ahead, but also that reflects their expectation that the supply chain will not have normalized by that point. And so they need to act now to make sure that they retain that lift.
Yeah, I think it's dynamic. I think we're seeing across the space, which is really interesting. Feeding into then maybe the secondary trading market, large, top 5 balance sheet lessors like yourself are of pivotal importance to a lot of the asset manager class, or those that play in the secondary space. Trading market, we're having these conversations last year. People said it's kind of stodgy, it's kind of slow. There's not as much trading going on. It seems like it's ticking upwards. But you stand back and go back to your point around, we were expecting X amount of aircraft, they're not coming. We're going to hold on to a little bit more. What's your assessment of the trading environment and the overhang the supply piece is having on it?
So I think if we look at the demand first, so what is the demand from people looking to acquire assets in that secondary market? That's very strong. There's a lot of liquidity in that market. People are looking to grow. And so the bid, if you like, for aircraft that you offer is very strong. And it's also having that other effect that we talked about earlier of having the airline coming in with a bid as well. And that's not just necessarily at the end of a lease. That might be if you're looking to sell an aircraft with 2 or 3 years of lease term remaining, that even the airline is interested in maybe acquiring it and buying out the remaining lease term. So that's strong. I think on the flip side, to your point, the supply has been constrained because if I was due to take delivery of, say, 50 aircraft this year, and now I'm only going to get 40, I'm going to also reduce the number that I'm selling.
Yeah.
And I think that's the same effect that you're seeing amongst all the bigger guys with the order books, because they're seeing those same delays on the front end. So they're still selling aircraft, but perhaps selling slightly fewer than they would have anticipated at the beginning of the year.
And if you look maybe from BOC Aviation perspective, 24 versus 23, do you think you sell more or less aircraft?
We'll probably sell slightly more aircraft.
Yeah.
And that's just a feature of the market, I think.
The value.
But probably not as many as we would have contemplated if you'd have asked me in January.
Yeah, no, that's very understandable. And if we look maybe on the interest rate environment, and again, I go back to a year ago, that the phrase was higher for longer. We'd had the whiplash of the rate increases from 22 into 23, general settlement towards the back end of last year. What's your outlook on interest rates as of now, and how does that feed into the business planning?
So I think it's changing constantly, because if you'd have asked people 6 months ago, they would have probably given you a different perspective to the one they give you today. The key thing that we look at is really the shape of the yield curve. And so what we're seeing today is we've had this strongly negative yield curve for a long period of time. And now it's starting to really flatten out. And we're having almost a flat yield curve now. It doesn't matter whether that's 3-month money or 30-year money. It's broadly the same price.
Yeah.
And so what we expect to see now as we move out through the next 6 to 9 months is that we start to actually see a more normalized yield curve going back to a positive yield curve again. And so then that starts to affect the way you look at your funding. What we've traditionally always done, I think, is run a slightly larger floating rate book than most lessors. And that's been driven by the fact that we raised probably more funding in the bank market than some of our similarly sized peers, which is one of the benefits of being based here in Asia. There's still a very deep banking market here in Asia, which doesn't exist in the same way in Europe and the US. And that market by default is floating rate. And so as those rates start to come down, as those short-term rates start to come down, that will deliver some advantage for us in terms of our overall funding cost. But broadly, even if you look at the bond market, if we look back 12 months, we were issuing 5-year bonds at an all-in yield of 5.9%. And the most recent ones we just did, 7-year bonds at 4.8%. So already we're seeing it coming down materially from where the peak was.
Yeah, and probably baking in that expectation of further drops. Who knows, right, from where we sit now. On the broader debt market, you touched on the traditional aviation banking market, particularly in the region here. Your assessment of the health of the aviation debt market, and that is maybe coming at it from the perspective of a large lessor around whether that's looking at unsecured market, whether that's the traditional aviation market. And are you accessing other products in that, given your size and scale?
We're actually trying to keep our life quite simple and straightforward.
Yeah.
So all of the funding we raise today is unsecured. I think out of our 460 aircraft that we own today, we have one still subject to secured debt. And that's a historical deal. And so everything that we're doing is in the unsecured market, whether that's in the bond market or in the bank market. And to a certain extent, I think that's where the bank market is getting pushed by some of the regulatory changes with some of the Basel III, Basel IV starting to feed through. The advantages from a capital weighting perspective of having the aircraft as security is not as great as it used to be. And for us, it gives us so much more operational flexibility having the unsecured funding. In terms of demand coming from banks, though, it's very strong. It changes geographically over time. Yeah, as I said, we do have this big bank of Asian funding that is available to us. But I think probably the biggest change that we've seen during the course of the last 12 or 18 months is also a lot of money coming out the banks in the Middle East. And I think that's being seen globally, as they're now not finding as many opportunities to invest in their region as they would like, given the amount of money that they're generating. And so they're looking for more opportunities outside the region. And so we've seen quite a lot of that come into Southeast Asia.
Yeah, so it's a generally healthy position, given where you guys sit. To pull on one thread there, that regulatory piece, do you think that ultimately might be a competitive advantage for someone like BOC Aviation? So if you're saying you're bringing in, new shiny metal iron, hopefully it arrives, but when you do, you will then be looking to finance the most fuel efficient aircraft possible. And as we see this regulatory agenda evolve, particularly maybe from a European banking perspective, that accessing that pool of debt funding is probably going to get more challenging for those that play in the secondary market.
I think so. I think we have one of the youngest fleets in the industry. Clearly, all of your order book coming in is brand new, latest generation technology. So there is a knock-on effect from that. But I do think in the global scale of funding for aviation, the European banks are not as big a piece as they used to be. And certainly for somebody like us, when you sit in Asia, if I go back maybe 10 or 15 years, our biggest group of banks probably did come from Europe. It isn't the case today. It's very much more Asian based. It's a different funding base that has come into aviation. And that does have a slightly different perspective on some of these things.
And maybe talking about a different pillar of the aviation financing market is around ABS, asset-backed securitization. It's an area BOC Aviation have played in the past in whether that's Shenton or Silver, but typically as an equity sell down. And we've seen that market come back in the last 6 months, predominantly as debt type instruments. If we end up in an environment where kind of rates come back, the E-note becomes attractive again, do you see that as a tool you guys will utilize again?
I think we will. I think, as you say, for us, it's not a source of funding. If it was a source of funding for us, we'd be swapping cheap unsecured debt for more expensive secured debt, which just wouldn't make any sense. But for us, it's either this is providing a good source of funding for the people we're selling aircraft to, and so we do see that provides a boost in that trading market whenever the ABS market reopens. And also, as you say, once that e-note market does return, we will look at, does it make sense again for us to do deals similar to the ones that we did in 2015 and in 2019?
Yeah, I think it'll be a kind of bit of watch this space, and such a volatile market that disappears, comes back strongly. But I still think we haven't seen an e-note market post-COVID, so just be very curious to see how that comes through. If I maybe move on to the investor side, can you talk to us, whether that's equity investors or people investing in your debt products? Have you seen any interesting trends or evolution in the nature of the investors you're engaging with?
There's always a flow that we see. I think if we look at away from the 70% that's held by Bank of China, the other 30% of our equity, we're probably seeing two key trends, I think, right now. One has been some growth in appetite from funds based in Europe. That's definitely been something that we've seen in the last 12 months. The second thing...
I was going to ask, is that kind of institutional European capital, or...?
Yes. Yeah. The second thing has actually also been an increase in appetite from Chinese-based investors. And so it's not necessarily as straightforward as you might imagine for mainland Chinese-based investors to buy stocks in Hong Kong. But there is a scheme set up called the Southbound Connect scheme, which enables them to buy shares in Hong Kong. And we've seen a material increase in demand coming through that Southbound Connect during the course of this year.
And does that feed in, if you put out the hypothesis, you look at kind of aviation finance, or maybe specifically aircraft leasing as an asset class, and you've kind of two pieces you could argue. One, COVID or the Russian challenges had an outsized impact, but the flip side is the sheer resilience of the business. As you weigh those two up against each other, do you think aircraft leasing is more attractive to invest in now versus maybe 5 years ago, less or similar?
I think, firstly, to your point, had we all sat there in 2019 and said, let's create a stress test for aircraft leasing, and we'd have said, okay, firstly, what we will do is we will ground the MAX. Then just as you're coming out of that, we'll have a global pandemic and global traffic will drop to 10% of normal levels. And then just as you're recovering from that, there will be a war and you will have to take a huge write down of part of your fleet. We'd have probably all laughed, said that's a bit crazy, but we would not have anticipated, had we tried to model that, how certainly the big lessors managed to come through that and come through it still with investment grade credit ratings, still with strong balance sheets, still remaining cash flow positive, in our case having remained profitable all the way through. I think we would have surprised ourselves and have surprised ourselves by the resilience of our industry. And so that does, I think, show people that these are strong businesses and they should see the value from that. So I think definitely that is part of it. I think what's also changing is that as interest rates are normalizing, having been very low for a long time and then gone up to elevated levels and start to normalize, that actually, against a normalized return, aircraft leasing does generate a premium, and it's something that does make sense for people to invest in. For us, we pay a very healthy dividend, and a lot of our shareholders now own us in their dividend funds because they see that as being a very stable flow of income.
Yeah, so one word's in your mouth, but it sounds more to the latter, right? The resilience trumps the challenges, and therefore potentially in a better place from an investor attractive perspective.
I think so. I think, clearly things like the fact we've got all these supply chain challenges and equity investors are always looking for growth is probably dampening the market a bit at the moment. But as we work our way through that, I think we should start to see value from this.
And to bring it back to a point we kind of touched on around that regulatory piece, an area we've always talked to participants as part of the report has been around the climate challenge and sustainability issues. I'll be honest with you, right? Over the last couple of years, it's got a bit boring to talk about it because I think maybe SAF one day will be something, but massive production challenges. And second, when I talk to people, does it actually impact on your ability to price debt or attract investors? The short answer is no. Would you answer back against any of those pieces?
Not fundamentally. I think if I look at what can we as aircraft lessors do, so we don't build the aircraft and we don't operate the aircraft, but what we're essentially doing is providing the funding to enable that transition to the latest generation of technology. And so if I look at our business today, I think we're 77% of the current fleet is latest generation technology. Clearly, all the order book is latest generation technology. And so we're providing billions of dollars to finance that transition. We will still continue to own aircraft. That is the nature of what we do. And we aren't planning to move away from that. But we are making sure that we're enabling the industry to go as fast as it wants to, or as fast as it is capable of doing, to transition to the latest generation, most fuel efficient aircraft.
Yeah, I think that's very fair. Just in closing, Steve, as I said, as we sit here in early November, as you look out into 2025, what are your optimism levels like?
I think they're reasonably strong. Clearly the demand for aircraft is good. I think we anticipate that the number of deliveries of aircraft that we will see in 2025 will be higher than 2024. We will not be through the supply chain issues as we talked about earlier, but I think we will be on a path at least whereby management of the large OEMs are getting their arms around the challenges and understanding what they need to do. And so I think we will see 2025 being a more positive year in that respect than 2024 has been.
Yeah, well, listen, on that hopeful note, Steve, I'd like to thank you as always for your time and insights on behalf of KPMG and Airline Economics, and wish you and BOC Aviation a very successful 2025.
Thank you.